What's up, everybody? Hopefully, everybody is doing great. Everybody is doing good, and it's on a Monday. I want us to go through my trade today, and I have set some certain rules that I'll be abiding by, and so that I may get to get better all day, every day, and at the end of the day, be profitable, right? So, as you can see from my chart here, I don't want to give a lot of stories. So let's get started and see what happened today. So, as you can see from my chart, today we have the USD JPY, and as you can see, I had a losing trade today, and for various reasons, as I've been journaling, I've got to find why that did happen, and I've identified what I did wrong, and for that I want us to see what I did wrong and how did I interpret this price. And so let's start from the 4-hour time frame, from where I was reading price. I don't want to get rid of anything because everything here was helpful for me, and from the levels I had marked, that's where I was anticipating some reactions off. So what I did see from the 4-hour time frame is we had these I guess you can remember from Friday, we had these displacement to premium levels, and over here, I guess the 3-hour order block, you can see how the bodies were respecting that 3-hour. Inside the 4-hour, we really didn't have anything much, but from this level, you can see the 3-hour order block being respected by the body closing and opening, and by the candles opening and closing below the main threshold of these 3-hour order block. So if you can see, these candles open and rally lower, closing be around below these, and also below these weak consequent encroachment. So to me, this was bearish, but what we can see is on Sunday the market rallied higher. Sorry guys, the market rallied higher into back to the 3-hour order block. I'll be showing you the order block, and then we can see how the bodies were really using the low of these order block, and we can see that sharp displacement lower. So generally I'll be bearish because over here you can see how the bearishness and the strength of the bear moves. You can see the large candles. We started with these sharp and a strong heavy down close candle. You can see again over here and here. So to me, with these key levels, as you can see, being respected, generally bearish, and to which levels, and what I had is we have these. I had today I was watching these daily fair value gap, which I wanted to see it being tapped into, then how the price action will show out, because using the premium discount levels from these may be low. Let's use these from that high to this low here. You can see where discount equilibrium is, this premium and this discount. So if you want to be buyers, then this is the zone that we want to be buying. But for us to be or to have market come this direction, then we must have a clear market make a sell model from the lower time frames, and deep into discount, maybe deep this discount here into these order blocks, then we can see a rally higher. So here below discount, inside discount, what you can see is we have this week. I would also want to watch the consequent encroachment of these previous these weeks, upper week. I guess you can see that. So the consequent encroachment, if the market maybe retraces to this level around now the midpoint of this discount zone, let's see the midpoint of the discount around here. So this the level that I don't want to see market go lower, the lower quadrant of these of the discount lower quadrant. I guess you can relate to what I'm saying. But for us to even deep to discount, we must have a clear market make a sell model, and from the daily time frame, what we can see, we have these liquidities that had been grabbed on Sunday. Yeah, this was on Sunday. You can see market had was it on Sunday or Friday? Yeah, the Friday. These liquidities was grabbed, and you can see how the market closed as a doji, and today the market rallied lower, tapping to this daily fair value gap. Maybe we can have support from here, we continue higher because we have both daily fair value gap from this level, this fair value gap also, this also another fair value gap. So the lower time frame will be giving us the story. So yeah, that's what I'm thinking. And to this green zone, that's where, because we have fair value gaps here, slight fair value gap there, we also have this inversion fair value gap. Now maybe the market, the fair value gap, maybe the market will react off, because I don't want to see market rally lower below these lower quadrant inside discount, right? So over here, I've talked about how price action was respecting this key level. Now I want to go to the 3-hour time frame and see the order blocks that I was talking about. So we have these 3-hour order block, these up close candle, and you can see these candle had closed below. We had also this drop below, then we had this liquidity grab. Usually after a liquidity grab, we have this retracement. So after liquidity had been grabbed, we saw retracement higher that created equal highs. So these equal highs, to me today, they were so tempting, and as we'll drop to the lower time frames, you'll see how above here we have clear liquidity that might draw the market higher. But from after equal highs had been created, we saw again a huge displacement. Then we have these clear of liquidity, and then we have a rally. We can see the bodies how they are respecting these low of the 3-hour order block, and market has tapped into the 3-order block. Again, we can see the rejection. Inside the 2-hour, I didn't see anything much, but the 1-hour, these liquidities above. So allow me clear these yeah, so that we may have, and also let me clear this 1-hour. So over here, these liquidities are something to be watching, right? Because we have relative equal highs there, and we can see the market was today kind of ranging. You see, after the liquidities had been taken below this low, see the market rallied high, created equal highs, rallied lower, cleared these lows, then rallied higher again inside that 3 hour order block. So after seeing this price action here, I use this high to this low. I guess you can see this the level this the tool I use to differentiate or to mark my highest high and my lowest low, so that I wanted to see market excuse me, I wanted to see market retrace to discount, then we sell off. Yes. So what I'd seen is we had this sharp drop from I want it to be central here. We had from this high candle closure below this 3 hour order block, and this was during London. We had this continuation until around 7 when New York started. By the way, I was one thing I made a mistake is I wasn't that relaxed to do my analysis, because immediately I got out of class, that's when I rushed to the charts to have these to be watching the New York. I had 2 hours, but I didn't utilize them. I did have a rush, and you can see I was stopped out. So what I'd seen is we had these lows here that had been taken here. Then you can see this displacement higher, and these tool here differentiating my premium discount levels. I used this candles wick, then this candle had closed above the consequent encroachment or the midpoint of this candle's upper wick. So to me this was was a bullish sign. So I wanted to see market create an immediate rebalance over here. So as it was dropping down, I had buy limit there with my stops below, slightly below this low. But what you can see is I wasn't also available to be watching how the candles were telling the story, because this candle closed below these weak consequent encouragement. So to me this would have been I could have cut my losses there, but you can see market rallied, tapped me out. Then later on we can see how heavy the market rallied higher and went our direction, and probably if I was not stopped out at around this level, then my TP could have been hit. I didn't have a 1 to 2, I had a 1 to 7, a 1, as you can see, not a 1 to 2, I had a 1 to 1.7. Why? Because this was from the high time frames. I only had this fair value gap as the draw on liquidity. I thought maybe the market would rally, maybe tap into the midpoint, then rally lower. But you can see the market rallied. If my 1 to 2 could have been hit, but I like to target a draw on liquidity. Then if it rallies higher, well and good, but mostly in these scenarios the market will react off this fair value gap and rally lower. But yeah, it was a bad trade for sure, because I was kind of impulsive. Though I had a good rate of price, I was in a rush because of my classes, and something I should be checking on. I should just be patient, or yeah, look for other solutions, as you can see from this trade today. So later on, because I've changed my rules, by the way, I'll be having a single trade per day. So if it was a loss, then I'll just watch price do its thing. So I will not enter another trade. Even if it's looking promising, I will not enter, because a single trade for me for the day 0.5 risk, because from February I'll be trading my challenge, so I want to be used to my trading rules, and that's what I want to improve and ensure that I'm patient enough. So one trade was it, but I was watching also EJ, and over here I noticed something. You can see this price, or that's a 1 to 2, but also I noticed something. So you can see this price action over here. So this was 630, market was displacing lower. Then we can see these sharp rally higher, created a fair value gap. We had a drop down, but the candles never closed below this 30 minutes fair value gap. Then we had this retracement higher with this close that was really bullish. I guess you can see the market flow. If the market is bullish, you can see how heavy these bullish candles are. So as I was watching that, I didn't have this trade because I wasn't tapped into anyways, but I wasn't in this trade. But something I have noticed is maybe in the 15 minutes I wanted to see market retrace lower into these 15 minutes inversion fair value gap, but you can see that didn't happen. It created a fair value gap that remained open. It wasn't tapped into. But going back into the 5 minutes time frame, what you can see, we had a fair value gap that was created. It was tapped into shallowly, and the market retrace. So these are the things to be watching. You might expect market to retrace lower, but in the lower time frames there's been a fair value gap that has been created, tapped into, and the market continues to rally. So in this instance, if it will ever happen, maybe this fair value gap for entry with my stop below this low, and maybe target a 1 to 2. Still, my trade for now couldn't have hit TP, but my partials, I could have taken my partials, but yeah, for now I could have maybe closed the trade, and I will be in a little bit of of um, of profit. So sometimes things like this may happen, whereby a fair value gap in the higher time frames is being created but not tapped into, but upon looking to the lower time frames like the 5 minutes, you can see a tap into, then a continuations high. So the main lessons from today's watch of the market is patience. I should be patient enough, and also usually the first move is usually a fake out that will be always be taken out. And in my journal I've noted that several times when the market has shown these wants to rally, usually don't take trades around this zone, because this first move is usually a fake out. Wait for the low to be cleared, then you can have these rallies. So that's the lesson for today. And also patience is a big thing, and just if there's no opportunity, then let it slide. So that was my trading for today. Like the video and subscribe to the channel, as we get to improve all day every day. So thank you, till next time guys, be safe.